Forex refers to the foreign exchange markets and the buying and selling of currencies. Every day, an average of more than $3 trillion in transactions takes place in the Forex market. Each of these transactions plays a vital role in establishing a currency pair's exchange rate. When a traveler visits a new country, or when an international business pays its foreign employees, they each convert their local currency into foreign currency. Over time, these transactions cause a shift in the exchange rate. When money flows into a currency, it strengthens. And when money flows out of a currency, it weakens. These shifts in value are what gives life to the Forex market. Forex traders attempt to predict the direction of an exchange rate just like stock traders try to predict the direction of a company's stock price. Forex traders buy a currency pair when they think the exchange rate will increase, and sell a currency pair when they think the exchange rate will decrease. And as a global market, they can do this 24 hours a day, 5 days a week. FXCM provides traders with cutting-edge trading platforms, advanced charting packages, and many other vital trading resources like Forex market news and analysis through dailyfx.com and free buy and sell signals through dailyfx Plus. To try your hand at the Forex market, open a free $50,000 practice account today. A lot is a term that refers to the smallest available trade size that you can place on your account. For example, a micro lot is 1,000 units of currency, meaning the smallest trade that you can place is 1,000 units. You can place larger trades, but the trade size must be an increment of 1,000, like 2,000, 3,000, or 10,000, to name a few examples. FXCM also offers standard accounts, which have a lot size or minimum trade size of 10,000 units. Again, larger trades can be placed as long as the trade size is an increment of 10,000, like 20,000, 30,000, or 100,000. A pip is typically defined as the smallest movement an exchange rate can make. Most currency pairs, like the pound-dollar, are quoted to the 4th decimal place like you see here. Let's look at an example to see what a 1 pip movement would look like for the pound-dollar. Assume that the buy price is currently quoted at 1.5863. If the price then changes to 1.5864, that would be an increase of 1 pip. Likewise, if the price changes from 1.5864 to 1.5863, that would be a decrease of 1 pip. Not all pairs are quoted to the 4th decimal place, like the dollar-yen, which is typically quoted to the 2nd decimal place. Therefore, in the case of the dollar-yen, a 1 pip move can be illustrated by a price change of 90.93 to 90.94. It is important to note that FXCM receives prices that are quoted in fractional pips. Fractional pip pricing includes an extra decimal place in the quote, which means the quotes are more precise. For example, we previously mentioned that the pound-dollar is typically quoted to the 4th decimal place. With fractional pip pricing, the pound-dollar is quoted to the 5th decimal place. With FXCM's fractional pip pricing, a price change from 1.58634 to 1.58645 would be 1.1 pips. The more precise quotes allow FXCM to provide you with the best available pricing to it, and for traders, the more precise pricing can mean lower transaction costs. Leverage is a financial tool that allows an individual to increase their market exposure to a point that exceeds their actual investment. For example, a trader goes long 10,000 units of the dollar-yen with $1,000 of equity in their account. The dollar-yen trade is equivalent to 10,000 US dollars. Because the trade is 10 times larger than the trader's equity, the trader's account is now leveraged 10 times, or 10 to 1. Had the trader gone long 20,000 units of the dollar-yen, which is equivalent to 20,000 US dollars, their account would have been leveraged 20 to 1. Leverage allows an individual to control larger trade sizes. Traders will use this tool as a way to magnify their returns, but it's imperative to stress that losses are also magnified when leverage is used. FXCM provides flexible leverage to its clients. You can trade with no leverage at all, or you can trade with a significant amount of leverage. FXCM believes clients have a greater chance of long-term success when a conservative amount of leverage or even no leverage is implemented. FXCM also understands that many traders find leverage to be a useful and necessary tool in their trading. To help traders manage the risk accompanied with leverage, FXCM guarantees a client's trading risk is limited to the equity in their account. This means you will never owe a deficit balance as a result of trading, even if a significant amount of leverage is used. This is an important safeguard most Forex brokers don't provide. In the spot Forex market, traders pay or earn interest on positions that are rolled over to the next trading day. At FXCM, the trading day ends at 5 p.m. Eastern Time, so any position that is not closed before 5 p.m., even one that opened only moments before that time, is subject to rollover interest, debits, or credits. FXCM's trading station platforms display rollover interest per lot traded. Let's look at an example. This trade is short euros and long Australian dollars. The trade size is 100 lots, and the rollover interest per lot on a short euro, long Aussie trade at this time is 88 cents per day. So for this 100 lot trade, $88 of interest will be credited to the account each day the trade is rolled over. If on the other hand this trade were long euros and short Australian dollars, then $183 would be debited from the account.
Welcome to FXCM and Forex trading. It's time to answer the big question. Why trade Forex? The foreign exchange market, or Forex for short, is the buying and selling of currencies, and it's one of the fastest growing markets in the world. From 2007 to 2010, Forex market activity increased by 20%, with average daily turnover reaching $4 trillion in April of 2010. Forex trading works much like it does with stock. You buy low and you sell high. But the nice thing about Forex is that you don't have to choose from thousands of companies or sectors. You can make it simpler. For example, most people, even those that are new to Forex, have opinions on the US dollar and the US economy. They can easily take their opinions and translate them into a Forex trade, buying or selling US dollars as simply as they can buy or sell a company's stock. Unlike some markets, Forex trading doesn't begin at 9 a.m. and end at 4 p.m. Trading takes place 24 hours a day, 5 days a week. For most people, that means after work or before work, they can trade Forex online. Plus, you can buy and sell at any time, in bull markets and in bear markets. It's easy to get started. You can sign up for a free demo with FXCM and get $50,000 of virtual money to practice trading online with one of FXCM's easy-to-use trading platforms, including mobile and tablet offerings. At FXCM, we provide all the educational resources and trading tools you need to go from practice trading to real trading. Online educational seminars and a suite of video lessons are only a few examples. If you need to discover the currency pairs, times of day, and trading strategies that are best for you, call one of FXCM's experienced Forex specialists. They can help you find the answers you need to get started. The time to trade Forex is now. Join the millions of traders around the world. FXCM. Redefine the way you trade. Visit fxcm.com/demo to try Forex trading risk-free.
Forex refers to the foreign exchange markets and the buying and selling of currencies. Every day, an average of more than $3 trillion in transactions takes place in the Forex market. Each of these transactions plays a vital role in establishing a currency pair's exchange rate. When a traveler visits a new country, or when an international business pays its foreign employees, they each convert their local currency into foreign currency. Over time, these transactions cause a shift in the exchange rate. When money flows into a currency, it strengthens. And when money flows out of a currency, it weakens. These shifts in value are what gives life to the Forex market. Forex traders attempt to predict the direction of an exchange rate just like stock traders try to predict the direction of a company's stock price. Forex traders buy a currency pair when they think the exchange rate will increase, and sell a currency pair when they think the exchange rate will decrease. And as a global market, they can do this 24 hours a day, 5 days a week. FXCM provides traders with cutting-edge trading platforms, advanced charting packages, and many other vital trading resources like Forex market news and analysis through dailyfx.com and free buy and sell signals through dailyfx+. To try your hand at the Forex market, open a free $50,000 practice account today.